Have you ever wondered how the stock market really works, but felt too overwhelmed to begin? You're not alone. In this complete beginner's guide, we're breaking down the stock market step by step. No fluff, no jargon, just real talk. You'll learn how the stock market works, what stocks, ETFs, and dividends actually mean, how to invest with just $100, and how to build real wealth without gambling. If you're tired of living paycheck to paycheck and ready to build long-term wealth, this video is for you. Don't forget to hit like, subscribe, and save this for later. Let's get started. The stock market is where companies raise money, and investors like us buy ownership in those companies. When you buy a stock, you're buying a piece of a company. That piece is called a share. So when you hear names like Apple, Tesla, Amazon, those companies are publicly traded, and their shares are bought and sold every day on exchanges like the NYSE and NASDAQ. Key point: the market isn't a casino, it's a marketplace of businesses. Think of it like this. You're investing in real companies solving real problems, not betting on a spin of the roulette wheel. There are two main ways to earn money in the stock market. Capital appreciation, when the price of a stock goes up over time. You buy low, sell high. Dividends. Some companies share a portion of their profits with you regularly. That's dividend income. Example: let's say you own 10 shares of Coca-Cola. They pay a quarterly dividend. That means you're getting paid just for owning stock. Imagine reinvesting those dividends over 10, 20, 30 years. That's how generational wealth is built. Let's quickly break down key investing terms. Stock equals ownership in a company. ETF, exchange-traded fund. A basket of stocks you can buy in one shot. Index fund, a fund that tracks a market index like the S&P 500. A brokerage, a platform to buy, sell stocks like Robinhood, SoFi, or Fidelity. Portfolio, of your collection of investments. Diversification, spreading your money across multiple stocks or ETFs. Pro tip: don't try to pick winners. Instead, invest in diversified ETFs like VTI or SPY. Think you need thousands to get started? Nope. You can start investing today with just 100. Here's how. Open a brokerage account. We recommend user-friendly options like SoFi, Robinhood, or Fidelity. Set up automatic deposits. Even $25 a week adds up. Choose a beginner ETF like VOO, S&P 500, or SCHD, Dividend ETF. Use fractional shares. Buy just a piece of a stock if needed. Check the description for links to SoFi, Robinhood, and Fidelity to open your account with zero fees. And some even offer a free stock to get started. What's your first $100 going into? Let's talk risk. Yes, investing comes with risk. But the biggest risk? Not investing at all. Leaving your money in a savings account earning 0.01% is actually losing money thanks to inflation. Here's how to manage risk. Don't put all your money in one company. Start with ETFs or index funds. Invest consistently, not emotionally. Think long-term, 5, 10, 30 years. Use tools like Chime's high-yield savings account to separate emergency cash from investment cash. Check the link in the description for Chime's top-rated savings platform. Yes, you have to pay taxes on gains, but don't stress. It's simpler than you think. Here's how it works. If you sell a stock for a profit, that's a capital gain. If you hold for over a year, it's long-term capital gains taxed at a lower rate. Dividends? Also taxable, but many qualify for favorable rates. Tools to help. Use TurboTax to file your investment taxes with ease. Or go hands-off with H&R Block's advisors if you prefer help. Links to TurboTax and H&R Block tax tools are in the description, plus a beginner-friendly investment tax checklist. Have you ever paid taxes on investments before? Drop a comment below. Okay, let's bring it all together with a simple beginner strategy. This isn't financial advice. It's a proven approach used by millions. Step 1. Set up an emergency fund, 3-6 months. Use Chime or SoFi to park this safely. Step 2. Pay off high-interest debt. Step 3. Start investing consistently in a diversified ETF like VTI or SCHD. Step 4. Automate weekly deposits into your Fidelity or Robinhood account. Step 5. Stay in the game. Don't panic. Don't chase fads. What's your biggest barrier to getting started? Let's avoid some rookie mistakes. Don't invest money you'll need in 6 months. Don't panic sell during a dip. Don't put your life savings into one hot stock. Don't follow hype. Follow the fundamentals. Do stick to your plan. Do invest in companies or ETFs you understand. Do track your portfolio monthly, not hourly. Use Fidelity or SoFi's dashboards to track your net worth and watch your progress over time. Here's the truth. Investing isn't about timing the market. It's about time in the market. The earlier you start, the better. If you're 25 and invest just $250 a month into an index fund earning 7% annually, you'll have nearly $300,000 by 45 and over $750,000 by 60. But you have to start now. Recap. Open a free brokerage with Robinhood, Fidelity, or SoFi, link below. File your investment taxes easily with TurboTax or H&R Block. Leave comment to receive your free stock market starter kit. Subscribe for weekly investing tips. Final question. What's stopping you from starting today? Drop it in the comments. Let's talk about it. And remember, you don't need to be rich to invest. You become rich by investing. Thanks for watching Stock Market for Beginners, a complete guide. Like, subscribe, and share this with someone you care about.